So what policy can two people agree with? One that pump fists the insurrection against the United States, and the second one always championing socialism. Credit card interest, specifically credit card interest being too high. Credit card interest right now, I would say on average is around 25%, and some store cards are even averaging up to 35%. And what these two senators are proposing is to lower the credit card interest to 10%. So what exactly is this policy? How likely is it going to be passed? What do people and experts think about it? And more importantly, what do I think about it? So let's just jump right into it. So what is the policy? Like we said earlier, they want to cap credit card interest at 10%. However, this isn't going to last indefinitely. It's not going to last forever. They want it to only last 5 years. And what the two senators are citing the reason for this policy is because of extortion and loan sharking, and that big banks have been making a lot of money off the American people. So this is our solution to help the American people with their financial bills, their financial health. And taking this quote in my best Bernie voice, working Americans are drowning in record credit card debt while the biggest credit card issuers are getting richer and richer by hiking their interest rates to the moon. It's just wrong, and it's exploitative, and it needs to end. Oh, actually, that was Senator Josh Hawley. Kind of sounds like something Bernie Sanders would say. Also citing a reason for this policy, if a consumer has $5,000 of credit card balance with a 28% interest rate and can only afford to make the minimum payments, $166 a month, it'll take that person 24 years to fully pay it off. And by the end of it, by just paying minimum payments, that person would owe $11,000 in just interest alone. However, if credit card interest rates were to be capped at 10%, they're claiming that consumer would save $7,000 of that $11,000. Oh, and for some reason, this one kind of bothers me. I saw the congressional hearing about it. They also cited Visa and MasterCard being the problem, which doesn't really make sense, because Visa and MasterCard, that would be like the same as saying, oh, the car companies make so much from the gas companies, you know, to fill up your gas. And I do think it would be tied together. However you get your gas doesn't pay for Honda's bills, you know?
Do either of you know how much debt is owed on your networks?
We're not the bank, so we don't have visibility into that information.
Okay, you have no idea. Either of you know what the average interest rate is on your networks?
Senator, we're not the bank. We don't set the interchange.
I know.
We don't set the rate.
And along with that, they also cited American Express, which is a really weird example. Out of all the big banks, American Express is probably one of the banks that makes the least of their profits from credit card interest. So that was a little bit weird. I guess just because you're a senator doesn't make you an expert. Okay, but how likely is something like that going to be passed? Because there have been some wacky kind of legislations trying to be passed through the Senate, through the House, and it really never really sees the light of day. So this legislation, there's probably going to be a good chance that it's like that. It's not going to see the light of day. This isn't the first time that credit card interest has almost been on the chopping block. Maybe just a year ago or 2 years ago, Bernie Sanders and AOC came together to try to make a bill that limit credit card interest to 15%. And that didn't work out. As you see, that credit card interest rates aren't capped at 15%. And it didn't even do well with the Democrat Party. Out of the entire Congress, so made up of the Senate, made up of the House, that's like 535 seats, I believe. Only 9 people actually voted to agree to this 15% credit card interest cap. However, things may be a little bit different because there is a temporary pause on credit card interest in this bill. It would be 5 years. So because it's temporary, there's probably a better chance that this bill will be passed. Another thing that will make this bill a little bit easier to get passed is it has Republican support, specifically MAGA support. Honestly, I think a lot of moderates are kind of still iffy on this credit card interest rate, but Trump, during the election trail, he did promise that he would do something with credit card interest.
We're going to put a temporary cap on credit card interest rates at 10%.
And with Senator Josh, there's probably a good chance that it would have a little bit more attention, a little bit more votes. Will it have a majority? I really don't think so, especially that after this legislation was announced, not too many people had too much to say other than people in this credit card community niche. Therefore, this bill may be killed on arrival. Okay, but what happens if this bill does get enough votes to pass and all of a sudden the public cares. What does that mean? So gathering the opinions of people who claim to be experts, Reddit, a lot of them share really similar thoughts on what would happen if the interest rate was to be capped at a certain percent, whether that be 15% or 10%. And a lot of the things that they tended to agree with was that the subprime market for credit cards would just be destroyed. It wouldn't exist. And the reasoning is that banks would be way more restrictive on who they allowed to get a credit card, because at that point, getting a 10% interest rate for credit cards, not even just credit cards, just loans in general, especially some of them mentioned auto loans, it would be cheaper at that point at a 10% credit card interest rate, depending on what kind of credit you have, to put your car payments onto a credit card. And with credit cards being an unsecured loan, that means banks wouldn't be as readily wanting to give people a lot of credit to use. So therefore, if they cap the interest rate at 10%, you may need a credit score of 740, maybe even 780 before you can even get a basic credit card. And also, since it's essentially cheaper to get a loan, they also theorize that credit limits would drastically decrease. Some things that some people on Reddit theorize is that banks would increase credit card fees. So maybe a late fee, maybe a return payment fee, all those little fees, instead of just being like $5 at the minimum, they might increase it to 10. For late payments, they may increase it even more. And that's how they think they would fill the revenue loss from credit card interest and just use a bunch of fees to make up that difference. And since it's cheaper to get this loan, that the people who are already irresponsible with credit cards and credit limits, that they would just end up holding more balances because, it's cheaper. The interest rate, the minimum payments would be a lot lower. So therefore, in theory, that you would think that more people would actually rack up more debt. But here's what the experts think. So they actually think really similar to the Reddit people that the subprime market would be basically destroyed, but also the people who are borrowing irresponsibly, that they would still turn to other means, other methods, if they got restricted from the banks and the credit cards, that they would turn over to payday loans or even loan sharks.
But think about what they would have to do if they didn't have access to credit cards and to credit card loans. Well, they might decide to turn to pawn shops or payday lenders that charge average interest rates of almost 400%.
So basically, even from the expert side, a lot of people don't think it's a good idea to cap interest rates. But what do I think? So I do agree with the experts and the people of Reddit that a lot of the times that when these policies go into effect, the policy that this intends to help the people are usually the people that suffer the most. Because just realistically, if you think about it, if the banks aren't making money off interest anymore, then they're going to be more restrictive on the people who have a balance with their credit cards. And I think this is something that's not brought up, but a lot of the times the credit cards, since they're unsecure, they can just close your credit card, and they've done this in the past before. And I've seen stories on many posts talking about how someone was carrying a balance because they had a 0% APR, but the banks, just in the middle of it, they decided to close it down, and then they were responsible for paying that full balance off. And I really think that could be a possibility when it comes to this 10% interest rate cap, unless there's something written in the legislation that banks can't close down your credit cards over this. But what do I think this will do for credit cards as a whole? Like, will it affect your multipliers? Because a lot of people say that. Since banks make a lot of money off interest, then they're going to restrict your multipliers. And that really does make a lot of sense, but I kind of doubt it. And here's my thinking behind it. So banks, how do they make money off interest? They want you to hold that balance and make sure that you're in a position that you may not be able to pay off that balance. So maybe they give you a higher credit line. Maybe they give you a promotional intro APR. That's how they get you with most of the interest. That's where most of the revenue comes from. However, with multipliers, that's a little bit different, because how they make money off multipliers is they make it from the swipe fees or the merchant fees. They usually charge between 2 and 4%. So personally, in my opinion, I don't think they're going to do anything with the credit card multipliers, because they want to promote spending. They may keep it the same, may not increase. They may decrease a little bit, but I don't think it'll be affected by too much, because that will basically be their only revenue source. However, what I could see is they cut back on welcome bonus offers like the 0% APR APR for 12 months, or even just as simple as giving you $200 back after you spend $500. Now, this is something that I've talked about privately with Anthony Venture, and this is something that we disagree with. And if you haven't checked out his channel, definitely do so. But his theory is that they'll actually increase welcome offers and welcome spend because they want to gather more customer acquisition. And on American Express earnings call, they've seen that the higher welcome bonuses they offer, the more customers they usually get. Therefore, in Anthony's theory, the more customers you have, the more swiping you get, and therefore more revenue for your business. However, I had to disagree because welcome offer spending, when you look at American Express's financials in 2022, almost make up a good chunk of the losses that American Express has as a company. And it's really close from the money they earn from interest. So that's a big thing. Welcome offers cost a lot of money to a lot of these banks. But the second thing is that these banks don't want to carry the risk in case you don't pay back, right? In case you're delinquent, because they also cost them a lot of money if you default on your credit cards and then you just can't pay it back. They work that cost into their portfolio. And with this risk being less profitable, therefore they don't want as many customers, therefore cutting the welcome offer spend. But which theory do you agree with? Leave a comment down below. And also while you're down there, check if you're subscribed. And also when you see other countries that have kind of crappy credit cards like Europe and Canada, I think a lot of it is due to them limiting the swipe fees. So in Canada and Europe, they limit the swipe fees to 1 to 2%. So it's not enough for the banks to earn money on that, so therefore they don't really offer that many competitive credit cards. But it didn't seem like interest rates determine the multipliers. So here's overall what I think will happen if credit card interest was to be limited to 10%. It'll make it a lot harder to get a credit card. You might need a credit score of at least 720, maybe even 740 to be approved for a basic credit card, really. Many credit cards may not have welcome offers, especially the ones that say 0% APR for the first couple of months. Third, your credit cards might be closed just because you're seen as a risky borrower, therefore you have to pay it back immediately instead of having that time to pay it back, because they don't want to carry that risk. Fourth, I think that they'll keep the multipliers about the same as they are. Fifth, I think they'll make back a lot of their money that they lost from interest from fees. Oh, and sixth, I bet you they'll change to American Express's model where they target more higher income individuals. A lot of the times when you see banks make a lot of money from interest, then usually it's a lower tier company like something like Citi, something like Capital One, where Capital One makes almost 70% of their profits from credit cards on interest rates, and it's kind of crazy. Annual fees may be higher, but yeah, that's basically what I think is going to happen to credit cards if this legislation gets passed. I know it's really grim, and personally I like to see, people not be stuck in financial debt. However, I do think that this legislation could do a lot of harm, especially if it's not done correctly. Like, for example, the banks not being restricted on if they can just close people's credit cards. But let me know what you guys think, and I'll see you later.